especially those who did not invest or are afraid of investing, that the only road to wealth is not the 9 to 5. You have to invest somewhere.
Hello, good morning, everyone. Happy Wednesday. I am Justin Nimergood, your host of the Real Estate Rockstars. I'm so excited today. We have a wonderful guest, Mr. Fadi Habib. Today's guest is passionate about helping professionals build sustainable wealth through education, risk management, and disciplined investing. Fadi Habib is an investor, educator, and AI consultant, as well as the founder and CEO of Legacy Wealthbuilder. With a background in engineering, operations, and higher education, Fadi specializes in coaching busy professionals to generate income and long-term wealth through responsible options investing without day trading, hype-driven strategies, or excessive screen time. His approach emphasizes structured systems, capital protection, and repeatable processes designed for consistency and longevity. Fadi is also the professor of project management, operations, and supply chain, bringing a highly analytical and disciplined framework to investing education. Through Legacy Wealthbuilder Academy, he teaches proven step-by-step systems, risk management principles, and practical strategies that help individuals invest confidently, even with a limited time or prior investing experience. Combining real-world investing, academic rigor, and modern technology, Fadi's mission is to demystify the markets and empower individuals to take control of their financial future through informed, responsible decision-making. Without further ado, I'd like to welcome Mr. Fadi Habib to the show. Welcome, Fadi.
Justin, thank you very much. Happy to be here.
Yeah, we're happy to have you. So let's dig right into it. I mean, obviously, lots going on in the market right now, right? We can say, and obviously everything in the market impacts real estate and often vice versa. You know, someone that's been a disciplined investor yourself and obviously built an academy as a backdrop for that. You know, what are some of the things that you're seeing right now that are some of the key trends, let's say, that if I'm someone that's either evaluating becoming an investor or investing in my first opportunity, what is something that, you know, those listeners and that audience out there should be looking out for? You know, what are the red flags? What are the things that are maybe markers for more good things to come?
Okay, so a couple of things. Before we dive into that, I just want to take it one step higher, is that it is very important that people understand, especially those who did not invest or are afraid of investing, that the only road to wealth is not the 9 to 5. You have to invest somewhere. So for me, there are three main ways to make money if you're really serious about making wealth. It's real estate, the stock market, and owning your own business. Owning your own business is the riskiest of all, the hardest of all. So really, you need to start with real estate or stocks, and there's no other way. 9 to 5 will never get swapping your time with money and saving are two sure ways that you will never make money or amass wealth. So investing is number one. You have to invest. Number two, everybody needs both. You can't do both at the same time. Like if you're starting, don't jump into the three or any of the two. Take one, understand it very well, make sure that you make money out of it, and then you go to the next. You need to understand they are two different animals. So for example, if you have a pet, having a dog is very different than owning a python. And the reason I'm telling you a python, Justin, because fun fact, one of the renters came to me and said, like in his application, he had a pet python. So called the city and stuff. So you need to understand that a python eats once a month. A dog eats twice a day or 3 times a day. You need to understand that the risk with the dog is that they might bite you. With a python, they're not going to bite, but they can constrict you. There's big differences between the stock market and the real estate. Real estate cycle is much longer. Okay. The stock market is very variable, meaning it goes up and down a lot, and we can make a lot of money from this variability if we understand how the normal behavior of the market is. Okay. So in the stock market, it goes up and down. And both of them, real estate and stock market, we need to be looking at the long-term investment because that's the responsible way of doing it. So I hate day trading. It's like we have this study that says that if you're day trading for 3 years, do you know how many people succeed or how many people and lose money.
Probably like 1% or something
It's about
ridiculous.
three, right? So it's a sure way for the masses to lose money. The only reason people jump into it is this ads on Facebook that tells you that I'm going to make $100,000 in 2 weeks or so. So understand that long-term investing is important. I do options to boost my ROI in swing trading, basically 2 to 6 weeks, but with the focus of long term. So long term is very important in both. Understand the different behaviors of the different things. So, for example, the stock market, if you're expected to go up all the time, that's an unreasonable expectation. The normal behavior of the stock market is that it goes up and down. Overall, if you look at the SPY, which is kind of we call it the market, it goes about 10 to 11% per year, but it doesn't go in a straight line. So in the short term, I really don't care about the different issues that happen in the short term. For example, this war that is going on right now. For example, the tariffs issue that has been happening a little bit. Because I understand that the market will find a reason to correct or go down a little bit, and I do understand that it's normal to go down, it all comes back to a couple of principles. Number one, our main objective in investing is not to get the highest ROI. And this is a very important thing. It's to protect our capital. And this is very important when people deal with the stock market, because if you go in with only objective is to maximize your ROI, you'll probably lose money. If you like, we all know Warren Buffett. The first rule of investing, Warren Buffett, is not get the highest ROI. This guy made about 6.5 million% ROI in his 70 years. But when they asked him what is the first rule of investing, he said, protect your capital. So in the stock market, number one, we protect our capital. Number two, we find ways to make the highest ROI, knowing that number one is preserved. So I will never go to a trade to get the highest ROI if I see that the risk on my capital is a little bit too much. Okay. So that's what I call responsible investing. Even real estate investors, for some reason, when they go to the stock market, it's like a casino for them. They don't.
It's like a casino.
Yeah. Most people actually use it as a casino. So any prudent real estate investor, when they go and buy a property for long term and hold, they will ask few things. They will ask, what is the rent? What are the expenses? What is the cap rate? Am I cash flowing? They do their due diligence. But most people, even real estate investors, they go into the stock market, they forget about all of that. Their extent is just to one of their friends tell them, go buy the stock, or they see a stock that goes up, up, up. They think it's going to go up forever. They buy. And as soon as it goes down, they panic and sell, which is, for me, is a casino. We're buying businesses. It's, again, as if you're buying a building. You need to be asking the right questions, because we're buying businesses. The only evaluation of a business, if it's good or bad, if it is making money. Okay. So, and you would be surprised that 50% of the businesses or stocks in the stock market are losing money.
Wow.
So 50%. It's very weird. So only 1% of the businesses in the stock market are investable, and there's a rigorous criteria for you to do it. It's actually very easy, like with a lot of free screeners. It has to be making money in terms of net income. It has to have a lot of free cash flow. That's very important, that the company has cash flow to invest in R&D and stuff. It has a very strong balance sheet. And for me, anybody who buys a stock or invests in the stock market without looking at the balance sheet and income statement, cash flow is basically gambling.
Oh, yeah, absolutely.
Right. It's as if you're buying a rental property because your friend told you go buy it without looking at the numbers. It's crazy. And here's the thing, Justin, most people do that, even sophisticated real estate investors. So there's what I guess my message here is this: there is a way to evaluate stocks. There's a way to know which ones are solid stocks versus not. There's a way to approach the stock market without the casino mentality. If you're afraid, if you can't sleep at night because of you're afraid about your investment, then you're gambling. There's an element of gambling in it. So a lot of myths that people have about the stock market is, for example, that the price of the stock is the same as the value. Meaning, the price and value are completely two different things. And when you look at the chart of Meta, you're only looking at the price of Meta. It has nothing to do with the value. Meaning, real estate investors know this. They like to find motivated sellers. So if somebody has a condo that is $300,000, but they need to move, or they have a medical bill and they need to exit, we sometimes put it on the market at $200,000, right? And you understand that this is a great thing because the price is 200, but the value is 300. In stock market, this is the case all the time. The problem is people don't understand that this is happening in the stock market, so they have no idea what is the value. There's something called the intrinsic value, and you need to figure this out. You need to find it. There's a lot of websites with paid subscription to tell you that. And for example, Meta right now is I think 600, and the value or the intrinsic value is 820. So it's a little bit undervalued. Apple, on the other hand, is a little bit overvalued. So knowing this intelligence is very important because the stock market is driven by emotions, fear and greed of the masses. That's why you see really good stocks with the prices going down, down, down. For
Yeah,
example, later,
I'm curious, right? Like, so it sounds like from what you're saying so far is you've got kind of the stock market, which is maybe it's a more volatile, place to invest in, but should be thought of with a long-term strategy. But it's also got these short-term repercussions as well. And then you got the real estate market, which is almost purely a long-term play. But what about, if I'm a real estate investor that likes to flip homes or, buy land and resell to developers and whatnot, how do you evaluate that compared to like the stock market?
so anything that is short term, anything real estate or stocks has more risk than long term. Okay, because flipping houses doesn't work all the time, right? For example, I'm in Canada. The real estate market has been going down. It's really hard for flippers, right? Because
Mhm.
if the stock market is going down, 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 total collapse in the condo market here, that is not a good time to flip, right? Because whatever you had, the profit that you could do 5, 10 years ago, it's kind of, you can't do it right now. So anything with a short term has a risk. Of course, there's a little bit more risk in the stock market versus the real estate on short term. That's why, for me, anything that you do should have a long term. Even the flippers in the real estate, you should have a plan B if you could not sell and get the profit that you want. What is going to do? Maybe plan B is to convert it to long term buy and hold, basically rent it and just leave it a little bit. You have to have a long term view, even if it's plan B. For the stock market, um, we never look at short term. However, it's very simple. 5 units, in every 5 units of time in the stock market, four of them would be going up. The market would be going up or going sideways, and 1 unit would be going down. It's very simple. Basically, we need to be able to make sure that we survive the 1 unit of time going down, because if you're very risky and you get wiped in the 1 unit of time, you will not be able to participate in the party and all the profits that people make in the 4 units of time. So we never, from the beginning, we never put ourselves in too risky of a position. Okay.
Mm.
Okay. Very important. Also, so a lot of risk mitigation things we do. For example, we never use margin. So in the real estate, the fundamental differences in the real estate, I will never buy a property. I'm a real estate investor too, without going and getting a mortgage from the bank, because it makes sense. It amplifies my ROI. In the stock market, I will never do so because it's very risky. And because I'm true to my objective, I will never be in a position whereby I'm putting my capital at risk. Okay.
Mm.
Understanding also the difference between price and value is very important. So Meta, for example, at the beginning of 2022, the price was $400, and by
Mhm.
end of 2022, it was 80. So everybody thought that it lost 80% of its value. Very inaccurate statement. It lost 80% of its price, not value. But if you know that the real value or intrinsic value is 300, now when you see a stock price going to 200 and 150 and 100, what should you do? The logical thing. You should buy.
Yeah, yeah.
But however, because most of the people in the stock market, 99%, are driven by fear, you will see the reason it's going down is that people are afraid because of whatever reasons. So they're selling. For example, now there's a war. Apple, Meta, and Amazon are all going down. Does Amazon revenue or profit or Meta profit or Apple profit gone down? No, but the price is going down. So that's a reason whereby people are afraid of something that has nothing to do with the business you're buying, and they just don't understand. So when people are selling because they are afraid, it's an opportunity for you. So when the market is going up, which is 4 times out of 5, it's easy to make money, basically. And when the 1 unit of time, when it goes down, if I'm developing this maturity model, investor maturity model, almost finished it. One of the main things to know if you're mature or not in investing in the stock market is when it goes down, when the market goes down, are you anxious? You're immature.
Mm.
If you see it as pure opportunity, so the only question that I have in my mind right now, what are the opportunities I need to capitalize on? Because there's a lot of stocks right now are on a discount. Meta 30%, Microsoft, great discount right now, 30%. And I'm really looking for 50%. When we learn from somebody like Warren Buffett, for example, he tells us that as soon as he buys the stocks, he's really looking for the stock to go down because he wants to buy more. Yeah,
That's how smart people think, though. I mean, right?
exactly. So if you go to, like everybody, knows, when we go to a convenience store, and let's say every day we buy a pound of tomato because we do pasta and stuff. So, and it's $5 per pound. And if you go to the convenience store tomorrow, the market, and suddenly it's the same good tomato, but it's at a discount $2. What do? Everybody,
We buy it all, right?
we
That's
buy
what my wife does with our Sam's groceries. It's like she buys more toilet paper than we'll need for the next 3 years.
if there's a discount, it's an opportunity. But this is what people do. This is like, be with me here. What people do is that when they go to the supermarket and they see the tomato at $2, they panic. They go home, get the tomato that they bought yesterday with $5, and go to the store trying to sell it at $2. That's exactly what happened, which does not make any sense. So, also, one very important lesson in the stock market is that the short-term price movement is very different than the long-term price movement. In the short term, think of it as the market for me in the short term as a drunken teenage party. Absolutely no logic to it at all. Okay, when you see a good stock at a discounted price, people sell. It's just very weird. There's absolutely no rationale. People do not understand if it's good or bad. So they just look at the price. They think everything is wrong. There's no concept that the price and value are different. Two different concepts. We don't understand the stock market is volatile, so it goes up and down, and there's nothing wrong with that. They only expect the stock market to go up, so they panic and go down. They don't understand that there is something called a good stock versus a bad stock. So when you don't have the information, the basic knowledge of these stuff, no wonder everybody's losing money. Like I started real estate 30 years ago, and 15 years ago, I had this view that anybody who puts their money in the stock market is a gambler, is an irresponsible investor.
That makes a big consortium out there then, right? Wow, Fadi. I mean, I'm so illuminated right now by what you've been sharing. I'm like wanting to go to my wife and point to you right after the show and chat with her about a couple of these tips because she's been kind of dabbling. She's been pretty serious about it with options trading. And, you've really dropped some knowledge today here for our audience as part of this, we'll call it master class that you're putting on. I want to pivot to the final section if we could, where I'm going to ask you a couple fun questions that I know our audience will love hearing about. So the first one is this. Let's imagine for a moment it's your last day on Earth and you can only preserve 3 items in your time capsule. What are those items and why?
Okay.
Yeah, I get that reaction quite a bit from that question.
Okay, never thought of that. 3 things. Okay. I will preserve number 1, a picture of me having fun. So it's either something I did crazy, maybe like parasailing, or I do scuba diving, or a picture of me on my motorcycle. So something that I was really happy doing.
Oh, you're a wild guy.
Yeah. Number 2, I will probably want to leave some kind of legacy. So I would put all of my course and knowledge into, I don't know, like a small stick to leave it to like the people coming after me to learn from what I learned. Because I spent so much time in corporate America, like wasting time in the 9 to 5. It's not wasting, it's everything. And people need to understand that the road to wealth is not like listening to your parents. I listened to my parents. I was a good kid. I got good grades. I got a good job, but that's not the road to wealth. It's a fallacy. Third thing, what should I do and maybe a picture of me with my family or my friends.
Ah,
Because
yeah.
end of day relationships are golden. Like, it's so something about me having fun, something to be about the relationships, and something about passing the knowledge that I have to live life. I love this question. I love it so much.
Yeah. Yeah. Well, thank you. It took me a while to formulate these questions, just to have fun, right? And I don't want to ask the same old questions. It's like everyone gets asked the same stuff. I want something to be a little bit out there that
Yeah,
people
yeah.
will go, huh, it really cracked my head a
Engaging.
little. Yeah. So we just have one more question for you. This one's a little bit simpler. So what is your definition of a real estate rock star?
A real estate rock star. Okay. So somebody who does not see real estate as a transaction. He understands that it's a journey, it's a road to wealth, and it's a way to pass wealth. It's not just a way to make wealth for me. It's the road to wealth for my great 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 grandson that I will never meet. It's a journey that I hope it will never stop in my family. Okay. Somebody who understand that it's a business, so it's not going into it as a speculator like the stock
Mhm.
market. Um, Somebody who is not just looking to add one or two properties. They are thinking long term, like how can I add 100? So basically, they have a plan for more and more and more,
Mhm.
which which is very different because you might not want to get the lowest mortgage rate for your next property because of your long-term goal. Somebody who treats people well. So I went through a lot of real estate courses that tell you have to screw your tenant, and they're like, that's stupid. The tenant is somebody who is buying the property for you. You should
Yeah.
be treating the guy or girl like a partner that is like ideal. Like, you should treat them well. You should get them some gifts. You should make sure that they are happy. Imagine somebody is buying the property for you. Why would you treat them bad? Like, you
Well,
gotta really be very respectful. So Rockstar also somebody who has a long-term view. So um, they will never prioritize a short-term gain for a long-term view.
mhm.
Somebody who overall is the net buyer of real estate. So
Mhm.
he mastered the what is a mortgage, he mastered the fact that he can get money out and invest more. Um, Somebody who buys more than they sell, basically. Also somebody who gives back. So star is somebody who teaches, is somebody who passes the wealth. Somebody does not have a scarce mentality. There's so many real estate out there. There's so much money to be made. There's so many countries. so,
Yeah.
so yeah, I put a lot there. But yeah, these are some of the things that I look at. So if I look at somebody who that I call rock star anywhere, right?
Right. Absolutely. I mean, well said. And I really agree with especially your last sentiment there around contribution. I mean, look at this podcast, right? I'm just doing this to put good content out there for people so they can learn, right? And have wonderful guests like yourself on. Thank you so much today, Fadi. You had such a good time. I learned so much. Like I said, I can't wait to apply some of the principles you shared. Um, for our listeners and our audience out there, where can they find and connect with you?
So my name is Fadi Habib, it's written there. Also, my company's name is called Legacy Wealth Builder Academy. So connect me on LinkedIn or Facebook or YouTube. And you can find me by Legacy Wealth Builder Academy. My website is legacywealthbuilderacademy.com. I frequently do master classes that are 3-4 hours to give much more than just the 10 minutes that you just heard right now. And a lot of people are very happy with it. They learn a lot. So it's if you didn't start, please start. Choose real estate or stocks. You should. You have to. Okay. And one thing I just want to leave people with is that if you don't do anything, you lost already. But if you do something, the only two outcomes is that you're gonna win and you're gonna keep on doing what you did right. But if you do something wrong by starting, what will happen is that you will learn. Now you have experience. So if you don't do anything, you lose. But if you do something, you will never lose, whether it worked or not. If it worked, you're going to do more of it. If it didn't work, let's say you bought a stock or you bought a real estate, didn't really work. Now you have a knowledge so that your next one doesn't happen. That's why I find people who are very intelligent, they don't get the results compared to other people with lower IQ. Okay. So I got to tell you that, because with people that don't have a lot of IQ and they jump in doing action, what happens is that their rate of acceleration is much faster, because if they did something well, they could keep doing it. If they did something bad, we know that this doesn't work, their next one, it has much higher chances. But if somebody has a master's or PhD and they're stuck analyzing a property for 2 years, I did that. I do nothing. I get nothing. So I look at other people who do not have the amount of skills I have, do not have the amount of IQ that I have, and they are much more ahead than me. So good thing for all of us. You don't need a lot of high to write a lot of skills. Just start, as long as you don't do something stupid, right, and kill yourself. Just start and learn. Okay, and that's the road. Okay.
That is the road to success. It's like what they say, right? You got to be, you got to start to be great. You're not going to be great to start. So
and you gotta fail. If you're not failing, you're playing such a small game in the world, right? Please fail. That's the road to
yeah, fail fast, fail forward, as God said. Well, Fadi, thank you once again. We appreciate you coming on the show today. For our listeners out there, I'm Justin Nimergood, your host of the Real Estate Rockstars, and we're signing off. We'll see you again, same time, same place next week. Thanks, everyone.